Good afternoon, everybody. Hopefully, everybody's having a wonderful Saturday. Hopefully, everybody has their holiday shopping done. And in the spirit of the holidays, I felt that instead of doing another lengthy X post, now that earnings season is finally over with and Micron has put the final nail in the coffin for the time being, we should make a video addressing the AI bears again and explaining why they're wrong, even though Oracle gave them a lot of firepower the previous week. I am not late. I came on time at 3 o'clock. I don't know what everybody is talking about, but thank you, everybody, for being here. Hopefully, grabbed a cup of coffee, maybe some chocolate, and relaxing. So, Spencer's here, Lena's here, Midwest is here. Thank you, everybody. Truly appreciate it. No, I've been using this camera for a little bit. It is time to grind. No, thank you for being here. So, we're going to get into it. I have some charts, but more importantly, I want to break this up into two different segments. And the only thing I am probably going to talk about in this stream is the idea of the AI bubble, the facts around what the companies are reporting in their latest earnings, and my feelings on it. So, most of it will be fact. Some of it will be the way that I am putting the information together to make a long-term projection. So first, I want to start on the infrastructure side with three companies, NVIDIA, Broadcom, Micron. Then we'll move into how the hyperscalers are utilizing all the products. So before I get into it, please take a moment, pause the video, and read the disclaimer. I am just some guy that does too much research and makes these videos to interact with everybody and to provide educational and entertainment purposes. I am not a financial advisor. I do not know your situation. Please do not make any decisions based off of what I am saying. Anything that I am doing, I know the risks, and I'm using my own capital, no one else's. But do not follow anything I say because I say it. Do not follow anyone else because they think something is going to work. Have your own investment thesis, and please do your own due diligence. Making coffee now. I love it. I love it. All right. So let's get into it. I am going to try to do better with timestamps. I know it's something everybody's asking for. And we are going to try make a conscious effort to do much better on this. So just bear with me one moment. And the reason I do this live is I don't want anybody saying anything's edited at all, ever. Everything is on the fly. Everything is live. So let's start with the three big hardware companies. All right. So NVIDIA is really the compute platform. Broadcom is the custom accelerators, switching the optics, and the cores of the AI factories. Micron, as we just saw, high bandwidth memory, all the DRAM going into everything. So the first part about the bears, and it is wintertime. They should be hibernating. I don't know why this is the fight that they decided that they need to die on a hill on, because it doesn't make any sense to me. And when people say bubble, to me, that usually means that it's all hype and whatever incremental demand there is going to collapse. But keep in mind that a true bubble has a consistent pattern. Forward demand is usually soft, visibility into demand is weak, and cancellations increase. In addition, suppliers traditionally guide down and de-risk inventory. That's not what I'm seeing. I'm seeing sold out conditions across the board. I'm seeing visibility, not just on a quarterly basis, but on a multi-year basis. I'm seeing huge backlogs, and I'm seeing tight supply as well in DRAM. So what the bears are basically fighting against, I'm really not seeing. So let's start with NVIDIA. They're the big one, okay? Sold out across the board at scale. Q3 fiscal year 26, and it annoys me because these companies do not report on calendar years. They're all over the map, so forgive me, okay? The reason NVIDIA is Q3 26, not Q3 25, is because their fiscal year ends in January, not December. So keep that in mind. Total revenue was $57 billion, 62% year-over-year increase. Data center revenue was $51.2 billion, up 66% year-over-year. Jensen did not mince words at all. In the earnings call, he said, quote, Blackwell sales are off the charts and cloud GPUs are sold out, end quotes. That has come in directly from Jensen. NVIDIA, when they say sold out, it's not a marketing phrase. It means buyers are capacity constrained. It means that deployments are ongoing and it's not theoretical. So I get very bullish when I hear this. Now, the bears are going to say, fine, good quarter. What about forward? Okay. Forward. Jensen told us 65 billion plus or minus 2% in Q4. That's a huge amount of revenue from a hardware company. It's sequential growth from a base that is already at historic levels. But the most important thing for me is the visibility, because NVIDIA is stating that it has visibility into $500 billion in Blackwell and Rubin revenue from the start through the end of calendar 26. Crazy. Crazy. $500 billion. I mean, that's where they have the visibility right now. And when Rubin hits, it could expand. So I got to tell you, AI scaling is not just GPUs. And NVIDIA is also hitting the ground running on the networking revenue, which came in at $8.2 billion, 162% year-over-year increase. So, look, I'm excited about NVIDIA. Everybody knows that. But it's more about the insight to demand that they're showing us. It's huge. It is absolutely huge. Now, when I look at Broadcom, they're the next big one, okay? You have quantified AI revenue. We got dated orders. And we got backlog that looks like straight infrastructure, not something that's going to die on a vine, something that's not hype. So they just closed out their fiscal year 2025. They reported last week, I believe. Total revenue, 24% year-over-year increase to $64 billion. AI revenue, $20 billion, which was a 65% year-over-year increase. Seeing a theme yet? Big increases in AI revenue with NVIDIA and Broadcom. Their semiconductor revenue, $37 billion. Now, in Q4, semiconductor growth accelerated 35% year over year. AI semiconductor revenue, $6.5 billion, which was 74% year over year. I mean, this is absolutely incredible. Huge demand. And where Broadcom becomes more powerful is that they're disclosing tremendous amount of orders. They referenced 10 billion order for TPU racks from the prior quarter. And they also added that the fifth XPU customer came in with a $1 billion order, delivery late 26. I mean, look, Broadcom is another integral part of the AI stack. And they're saying AI switches backlog exceeds $10 billion. I mean, you don't build networks for no reason. You build it because all of the supercomputing clusters are coming. I don't know what the bears are looking at. I don't know why they're not looking through what is actually being said on these earnings calls. But that's why they're bears. Now, to me, the knockout from Broadcom is 73 billion in AI orders in hand that they are saying will ship over the next 18 months. And their AI stack contends of XPUs, switches, DSPs, lasers, PCI switches. 73 billion AI orders in hand. I mean, that's almost half of the backlog when they gave us a 162 billion number. So for me, this is very bullish. They guided Q1 for 28% year-over-year growth, 19.1 billion, and they expect AI semiconductor revenue to come in at $8.2 billion. Okay, 100% year-over-year growth. Now, we get to Micron. Micron just reported. So if people thought that NVIDIA's numbers were cooked and if Broadcom's numbers were cooked, well, how about Micron? Different side of the stack, DRAM, most importantly for supercomputing, high bandwidth memory, HBM, okay? So Micron indicated that Q1 2026 exceeded the high end of guidance on revenue, and DRAM revenue came in at 10.8 billion, 69% year-over-year growth, with pricing up about 20%. NAND revenue, 2.7 billion, 22% year-over-year growth. I mean, in semis, pricing power and record mix is where real demand comes from. It's what I'm looking at. And I gotta tell you, the HMB supply for calendar 26, they said is already locked in. That's huge. So their forecast for the high bandwidth memory is a TAM compounding at 40% on a compound annual growth rate through 2028, from 35 billion to 100 billion. And they say the 100 billion revenue milestone in high bandwidth memory total addressable market arrives 2 years earlier than expectations. What does that tell you? It tells you that the hyperscalers cannot get enough of anything that they need. They raised their CapEx for fiscal year 26 to 20 billion to support the high bandwidth memory supply. Now, you don't expand CapEx on their foundries and their manufacturing unless you have the order flow. So I got to tell you, this is really, really, really interesting. So we see across the board from the AI stack, NVIDIA, Broadcom, Micron, all expanding, all operating in different sides of the stack. It's not just NVIDIA. It's across the life cycle of what is needed. So when I think about where the AI bears are coming from, I'm not understanding what they're looking at because all the revenue is expanding at rates that are much larger than in previous times. We know that this is a scenario where the hyperscalers continue to increase their CapEx, continue to build out, but they have such a big RPO that it's truly incredible. So when I think about the other side, okay, that was the main points from the actual hardware side about all the growth. But when I really think about the big picture, an AI bubble is just driven by stories, not driven by facts. I mean, I just told you where all the infrastructure facts are. Now we're going to go through the other ones. I mean, backlog and remaining performance obligations shows us that the future revenue is already contracted. We have CapEx and physical build-outs. This is where the cash is being deployed. And we have real-world usage metrics, tokens, inference, AI product adoption. We're being told all this from the hyperscalers. So it's not just visibility into revenue, it's visibility into the monetization. So if the AI demand was fake, I think we would see backlog slowing, we would see CapEx rolling over, and we would see expansion projects pause. Is anybody seeing expansion projects pausing or accelerating? Because I'm just seeing it accelerate. So multi-year contracts, rising CapEx, and supply constraints. That is not indications of a bubble. So look, there's three main companies with a fourth that gave the bears what they wanted. You got Microsoft, you got Alphabet, you got Amazon, and then you have Oracle. The reason I'm not going to put Meta in is because they are not utilizing AI the same way as these other companies. They are not cloud proficient. They do not have an Azure or AWS or Google Cloud product. They're using it for something completely different. And while their spend is just as important, I want to keep this very segmented toward this side of the AI stack. So I'm going to start with Microsoft because it's the cleanest proof set in AI, in my opinion, because they have enterprise software, they have Azure, and they have a huge backlog figure that, to me, is difficult to dismiss because it's Microsoft. Need we say more? So commercial remaining performance obligations for Microsoft, $392 billion, up 51% year over year. I mean, that's the contract book. That's where the future revenue is coming from, and it's already been signed for. So where is it being driven from? Well, they told us accelerating demand for cloud and AI. So let's connect that backlog to what's happening in the business. Microsoft posted that Microsoft Cloud revenue was $49.1 billion. It was up 26% year over year. And they reported that Azure and other cloud revenue increased 40%. I mean, the bubble story, the bears would say growth was strong, but they're just experiments or something along those lines. I really don't know what the bears say because they're bears and it's in one year, out the other. I hear the bear statements on CNBC and Bloomberg, and I read them on X, and they don't make sense to me. There are companies that are expensive. Everybody knows that I think companies like Palantir are expensive, but that doesn't mean that this is a story that is incorrect. Everybody knows that I think Oracle's balance sheet looks horrible, and the cash flow statement scares the hell out of me. That doesn't mean that the other companies aren't doing things correctly. So, look, Microsoft's spending a lot of money. Quarterly CapEx was $34.9 billion. I mean, they deployed to CapEx what companies wish they could generate in revenue. But this is driven by what is going to drive their business in the future, cloud and AI demands. And they said roughly half of that spend was on short-lived assets, primarily GPUs and CPUs. And that's not really a vague statement. Microsoft is telling us exactly where the money is going. Short-lived assets means more compute hardware. It means accelerating deployment now, not a maybe later that the bears can cling on to. And when we look at the actual numbers, they told us on the earnings call that they will increase total AI capacity by 80% this year. Their fiscal year ends July. So this year, AI capacity increasing 80%. They are planning to roughly double total data center footprint over the next 2 years. This is not what a company in a bubble does. You don't double footprint. You don't talk about things casually. They do it when demand is visible and contracted. I mean, it is the biggest constraint right now is energy. And they said it. They described a major AI data center development that's going to scale to 2 gigawatts. These companies are now being measured in gigawatts and energy. In the AI era, this is the new KPI, key performance indicator. It's gigawatts because power is really the constraint. And they also indicated that Azure AI Foundry has 80,000 customers, including 80% of Fortune 500. They cited 900 million monthly active users of AI features and 150 million monthly active users across Copilot. I mean, this is not something that I think sounds like a bubble. Now, I'm going to go to Amazon. AWS reaccelerated 20.2% year-over-year growth, and they continue to see demand for AI and core infrastructure. They said on the earnings call they have added 3.8 gigawatts of power capacity in the past 12 months. I mean, this is huge. They indicated that the Trainium 2 TPU chips are fully subscribed. It's a multi-billion-dollar business, and it grew 150% quarter over quarter. Think about that. We know Anthropic is using their data center Rainer and went online with 500,000 Trainium 2 chips. They're expecting Anthropic to utilize more than 1 million of these chips by the end of year. This is, once again, not something where this is a bubble. You have demand outstripping supply. So none of this is experimental. And I got to tell you, the Bears, once again, there's nothing for them to stick onto. I don't understand what they're looking at. You can see it with Bedrock. Amazon's increasing the measured productivity in tokens, the consumption in power. And when you see AWS reaccelerating compared to what it did the previous quarter, it's showing us that the demand for their cloud and AI services is just increasing. Move to Alphabet. Backlog, once again, tied to enterprise AI. You had them tell us that Google Cloud revenue on its own increased 34% year over year to $15.2 billion. $15.2 billion, 34% increase year over year. Big numbers. These are big numbers. So CapEx for Alphabet was $24 billion, and 60% is going to servers, 40% data centers is what they told us in the print. Now, Google has other developments. They have all the things going on with Gemini. They're processing over 1.3 quadrillion monthly tokens, which represents more than 20x growth in the past year. Gemini models are processing 7 billion tokens per minute, and the Gemini app has 650 million monthly active users. This is when I wish ChatGPT was public so I could get all the information from them also. But this is the cleanest representation of the metrics behind the model, not just the cloud RPO and how much revenue it's doing, but how much people are utilizing the freaking model. So once again, AI demand is real for Alphabet because we're seeing Google Cloud accelerate, we're seeing the backlog grow, and we're seeing Gemini scale. There's no way anybody can say that it is not performing and accelerating on all cylinders. Now, Oracle is the double-edged sword in the group. And they're the double-edged sword because of the balance sheet and the cash flow statement. They have a net liquidity position of around negative $80 billion. That is very simple. Short-term cash and cash equivalents minus long-term debt. They have $99.8 billion in long-term debt on the balance sheet. They're the only one out of the hyperscalers that cannot write a check and eliminate their long-term debt. And the only one out of the hyperscalers where the CapEx is outstripping cash from operations, leaving them in a negative free cash flow position. While that is all true, and while the bears are sinking their teeth into it, the metrics underneath from a business aspect indicate why Oracle is putting themselves in this position, because they truly believe that this is the future of the company. So when I look at their AI demand, these are not numbers that you can fake. I mean, they reported that their remaining performance obligations were $523 billion, which was up 438% year over year. That's not normal. It's not cyclical. It's a structural shift that companies need more. Oracle indicated that the RPO increased in their second quarter by $68 billion, which was highlighted by new commitments from Meta, NVDA, and others. So if they're getting contracts from Meta and NVIDIA, two of the companies with two of the strongest cash flows in the entire market, I'm not worried about them not being able to pay their bills. So cloud infrastructure on OCI, which is their infrastructure as a service, increased 68% to $4.1 billion. I mean, Oracle has its flaws, but once again, they indicated that they delivered 50% more GPU capacity than in Q1. Not year over year, but than in Q1. Their current supercluster build, they're saying, is on track to house more than 96,000 NVIDIA Grace Blackwell GB200s. They're also taking delivery of the AMD MI355s as well. So this is where I'm at. Backlog across the board from the software and the infrastructure stack. It does not bode well for the AI bears. AI is not a bubble. It's an infrastructure cycle. Now, I could not tell you when that cycle is going to slow down, if it's going to implode, when it's going to change. I have no idea, and really nobody else does. And the reason that the cycle continues to be persistent is because the workloads continue to expand and they're real. The workloads are scaling, they're being contracted for, and they require more compute, more networking, more power than the legacy software stacks ever needed. The bears can argue about anything they want, but the one thing the bears can't argue is the numbers. Look, the numbers are truly the details. And unless we think the numbers are fake, this has a lot of legs. There is no indication that 2026 is going to be anything different than 25 regarding the AI infrastructure build. If anything, the numbers are showing us that more CapEx is going to be deployed. We got earnings season in 4.5, 5 weeks from now. Today is December 20th. When do we have Tesla kicking it off? Tesla, let's see. Tesla will be kicking it off on the 29th of January. So we got 5 weeks away. Google will be reporting on February 4th. Amazon will be reporting on February 3rd. Microsoft will be reporting on January 29th. Apple will be reporting on January 29th. And Meta will be reporting on January 28th. So we have big first and second week. Big first week of February, big last week of January. And then we get Jensen coming out on February 25th. I mean, what does everybody think that they're going to say? That they're spending less? That they're making less money? I didn't name Oracle in this little transition. I think the AI trade is real. I think it has legs. I think it's going to expand. And when I look at the capital that these companies are generating, and I look at the valuations, I don't want to be in other plays right now. And this is just for me. Okay. This is the updated numbers. And I'm going to pick on the same companies I always pick on because I think we need a re-rating in the market. Okay. Once again, I'm sick of doing something nice by making everything in the same lineup with the current fiscal year and then the next 2 fiscal years out, because too many bears have said, well, they report on different dates, blah, blah, blah. So I did you a favor, bears. I grouped everything together. NVDA and Walmart finished their fiscal year in January. Microsoft finishes in June. Costco in August. Apple, September. Broadcom, October. Meta, Amazon, Alphabet finish on a regular fiscal year that's calendar year based in December. So we have everything out. Column D is all of these companies' current fiscal years. Column E is the next year earnings. Pretty simple. Pretty simple. So when we look at the current fiscal year, then we have the valuations, columns G, H, and I. NVIDIA is trading at 38.5 times their current fiscal year earnings. They are expected to trade at 18.8 times 2028 earnings. 105% EPS growth over the next 2 years. And they're trading at less than 20 times earnings. And they're on track to be the most profitable company in the market next year, in calendar year 26. And then you got Walmart, that is a great company that has a quarter of the EPS growth over the same time period, and it trades at almost double the valuation. That makes no sense. That makes no sense whatsoever. $1 of revenue and $1 of earnings equals $1 of revenue and $1 of earnings. 10% increase in free cash flow is 10% increase in free cash flow. Does not matter what segment you're in. And the biggest thing about these valuations are bears or other people are trying to make the case that, well, their businesses are predictable. No, they're not. Their businesses are not predictable. Walmart's business is not predictable, nor is Costco's. And Costco has an even bigger valuation at 35.11 times 2028 earnings with less EPS growth. They're competing against Amazon. Yet they don't have an AWS in it. Amazon's got 33% EPS growth over the same period, and they're trading at 24 times forward compared to both of them being in the 30s. Now, I don't have a problem with Walmart and Costco trading where they're trading if big tech was to get re-rated, because when I look at this, I think that the best companies in the market deserve a re-rating. Costco and Walmart will never have the balance sheet that a Microsoft has. They just won't. Microsoft may be the most complete and perfect company at the end of the day. Because when you talk about a company that is truly recession-proof, companies are not getting rid of their Azure storage. Companies are not getting rid of SharePoint. Companies are not getting rid of Dynamics. They're not getting rid of Office 365. They're not getting rid of the software stack from Microsoft. People are not getting rid of Windows. They're not stopping to buy new computers. You have upgrade cycles all the time. Microsoft's revenue is very predictable. And if you're going to give Walmart and Costco the valuation that you're giving them, Microsoft deserves the same thing. Same with Apple. They deserve the same thing. If we're going to pay up for quality, Microsoft and Apple are higher quality than Costco and Walmart. I mean, why? Because we need to buy groceries. We can get everything we need on Amazon almost. So it's crazy. Look at Alphabet. Alphabet's been on a huge run. I was pounding the table at 150. I'm on the record on my articles on Seeking Alpha every time. And I was pounding the table when nobody else wanted it. And even after 100% run, it still looks inexpensive at less than 25 times forward earnings and less than 30 times this year's earnings. And the only reason that they only have 22% EPS growth is because the street has taken their numbers up so much this fiscal year in what they're expected to produce. That's the only reason. If you looked at where their numbers were at the beginning of the year, they would have way more growth on that last column. Now, these are not my numbers. These are the analysts from the street that are aggregated on Seeking Alpha. I compile everything. I don't use my own numbers, my own projections. That's for me to make investment decisions. But when I'm seeing NVIDIA making or generating 105% EPS growth over the next 2 years and Broadcom doing 75%, that's a lot of increase on the revenue side for the hardware. The hyperscalers are just going to spend more in the short term. And look, maybe this increase in spend only happens for another 3 years. I can't tell you what's going to happen. Maybe it only goes out another 3 years before it goes into maintenance mode. But even in maintenance mode, they're still going to be spending a tremendous amount of money. And we have seen what happens when you don't spend CapEx. You got Apple. People hate to admit it, but it's the truth. You got Apple barely spending roughly 11, 12 billion a year compared to everybody else. And what has happened? Well, since 21, Apple's revenue has increased 14%, and their cash from operations have increased 7%. The cash from operations is the most important thing because Apple was the only one in fiscal year 21 that was exceeding $100 billion. Okay, let me say that again. Apple was the only one that was exceeding $100 billion. All these other companies were spending a tremendous amount of money on CapEx. And then what happened? Oh, that's what happened. In the TTM, they're all doing over $100 billion. And the only company that Apple from these five is outpacing is Meta, and that could flip next year. And the growth in cash from operations from the TTM to 2021, 7% for Apple, 77% for Microsoft, 65% for Google, 86% for Meta, 182% for Amazon. I mean, you can argue all you want, but the numbers are the numbers. These are the facts. So, to sum it up, the AI bears, to me, are incorrect. This is an industry that is just going to get bigger. We do not know how big it's going to get. Nobody can accurately forecast that. We can't accurately forecast what it's going to be like next year, let alone 5 or 10 years from now. But the biggest thing is that the greatest CEOs of the biggest companies in the market today are all staking their futures on this. And they're embedding it into the products that the rest of business needs to use. Nobody's coming out with a new computing platform other than Windows that's going to be used. Linux did not take off. I got news for everybody. Mac just isn't really used for business. People don't really use Google Sheets and the Google suite of products the way that Microsoft Office is used. That's just a fact. Now, it is getting more popular, but companies, I am not seeing people sending me stuff in Google Sheets or stuff like that. It's all Microsoft files. Now, when we look at this, this is a trade, can last a year, can last 3 years, it can last 10 years. I have no idea. All I know is that they're not done building yet, and this is real revenue. The only company out of these that are funding it through debt is Oracle. They're the only ones. All the other ones can write a check. So to say that this is a bubble is intellectually wrong. I'll debate anybody on it because I'm going off of the actual numbers. And I'm going to show you the actual debt right here. I mean, it doesn't take a rocket scientist to go through the balance sheets, take their cash and short-term investments, what their long-term investments are, and what their long-term debt is, and get a net liquidity position. Oracle, negative 80 billion. The rest of them are fine. And then think about this. That cash from operations is significantly different across the board. So the bears sinking their teeth into Oracle is the wrong move to make. Because guess what? If something happens with Oracle, that RPO is going to shift to the big three, most likely. Now, to me, I wouldn't bet against Oracle. I think the drop was warranted. I think the criticism is warranted. I'm criticizing them, but I'm also not naive to think that Oracle is going to go under. So I don't think that's happening. I think Oracle is just going to have to borrow to expand because the bottom line is their cash from operations is not nearly what the other four are. But that doesn't mean that they're wrong, especially when we see what Amazon, Microsoft, and Alphabet are doing. Now, I would rather follow Larry Ellison, Sundar, Nadella, Jensen, Jassy, Zuckerberg, Elon. I'd rather follow them and listen to them telling me through how they're allocating capital that this is the way forward, that this is the future of their companies, rather than listening to the bears. At the end of the day, do we really think that these companies are not going to lead the market next year or the year after? Do we think that this is going to go back to Exxon and industrials leading the market? I don't. Now, if you do, that's fine. And my whole premise is not going to interest you. But the CEOs are telling us on the conference calls, they're showing us where they're allocating capital, and they're showing us from where the revenue growth is coming from. They're showing us the order books. So put it nicely, the AI bears are wrong. Once again, this is not the dot-com bubble. This is not venture debt. We're not in a situation that's a perfect storm with the Fed raising rates into a situation where all these venture capital firms deployed capital into companies that aren't generating revenue. You have pockets of the market that's expensive. That's any market. Your Oculus, your SMRs, even your Palantirs. You have things that are expensive. That does not mean AI trade is not real. So that's where I'm at with this. I have not been looking at the comments because every time I look at the comments, I crack up and I lose my train of thought. So I'm just going to start looking at the comments now and interact and take questions. But that's the rant on the AI bears. Let's see. I did not read the Warner Brothers response at all. I need to look at that. Oh, June. See, this is why. June's trying to make me laugh. Clorox is going to be the next company to 10x. Exactly. We Clorox. I mean, 10x. Thank you. Appreciate it. Yeah, look, I'm trying to be rational and keep everything to the point with the numbers because that's what this is. This is strictly by the numbers. I make my investment decisions based on what I am reading and what I'm seeing. No ifs, ands, or buts. If the numbers do not support this, I would be going in a different direction. I haven't looked into SMCI yet. I'm trying to get into it, but I am not there yet. Let's see. There's too many factors for me to quantify the cost per AI query, and they're not giving us enough data for me to do it. I'm not spending my time doing it. This is funny. How you not getting bald, what you invest on your hair. What are you talking about? I'm not going bald. And this isn't stressful. I don't know. KMB looking interesting now. What is that? Kimberly Clark? KMB? Yeah, Kimberly Clark. I don't know. I have not looked at Kimberly Clark in so long. Over a 5% dividend. Okay. That's a little interesting. I have no idea why it went down. I just don't follow them. Tom Lee talking about Bitcoin. I don't follow Bitcoin, so I can't tell you. Oh, look, we don't know who bought and who didn't buy, but the reality is this isn't a bubble. So the bears can come up with everything they do. Doesn't matter. Let's see. Tom Lee thinks more downsides coming. Look, retracements are inevitable, okay? They are inevitable. Here's the thing. You got the economic projections out of the Fed. Everything looks good. You have GDP growth from what they're seeing through 2028. You have unemployment tapering off and starting to decline from what they're showing. Inflation just got smashed to 2.7%. I mean, there's no reason for us not to get more rate cuts next year, especially if Waller comes in and get a new dot plot. So can we get retracement? Absolutely. But I still think, where did we finish the S&P? 68.34. I still think we can hit 7,000 this year. Maybe that's wishful thinking, but that's like 3 really good days. We could get that. I got news for everybody. We hit 7,000. This macroeconomic setup, we can get 8,000 next year if there is not a black swan event or something happening out of the blue. Oil is at 56.50. As long as oil stays between 55 and 65, to me, that's the sweet spot for everybody. As the sweet spot for everybody. Look at the price of gas. I mean, here we go. Now I'm going to go to the macro side. Okay. Now we're going to go to the macro side, and I'm going to make the point. You want input costs to come down, not just for the cost of living, but for business. Okay. Crude down 18.5% year over year. Brent down 17%. Natural gas still high, but it's not as high as it was. Gasoline's down 12% year over year. Heating oil down 5%. Now, the big numbers, orange juice down 62%. I mean, you don't hear anything about supermarket prices anymore, do you? Palm oil down 12%, cheese down 18% year over year, milk down 16%. I mean, that helps me. I drink a lot of milk. Orange juice down 62%, as I said. Coffee's up a little bit, but that's more agricultural with droughts and rain and those cycles. Rice is down 30%. Let's see. Sugar down 24%. That's a big one because of how many products sugar is in. Cocoa, which is chocolate, down 51%. Butter is down 40%. Potatoes are down 78%. Things that make you go, okay. Eggs, 78% down, okay. 78%. Now, like the administration, don't like the administration. I don't really care because I'm not a political person. But these are huge drop-offs from where we were. And when you have input costs come down like this, guess what? Inflation is going to follow, especially with oil. So this is a really good setup for next year. I really think it's a good setup for next year. Let's see. Look, as far as energy policy, we need more upstream production. We need more pipes. We certainly need more power plants. We need more of everything. Oh man, the fight last night. Look, I am glad it ended the way that it ended. Jake Paul deserves a lot of respect for stepping in the ring with AJ. I mean, I don't know many people, regardless of what he got paid, that would do that. I mean, he's a killer, world champion, Olympian, gold medalist. And you got to respect Jake Paul for getting in there. But it ended how I thought it was going to end. It just didn't end in round one the way that I thought it was going to end. So that's my thoughts on the fights. I did think that Anderson Silva's KO was incredible with that uppercut. I don't know if we're going to get housing reform, but I do think that we're going to get much better 30-year mortgage rates at the end of next year, and I think the housing market's going to get unlocked. I also think that we need to warm up to the idea of portable mortgages. I don't like the 50-year. I think the 50-year is stupid. But, you know, before I finish that thought, listen, I'm not going to say that, what you're putting in here, but two things. One, I think the fight should have ended in round one, so let's leave it at that. I'm surprised that it took 6 rounds to KO him, okay? I'm not going to go down that rabbit hole, but I'm very, very surprised it ended in round 6, not round 1. And you want to freaking talk about respect. Look, he got into the ring with the guy. You can't discount that. Regardless if you're making a spectacle of boxing, boxing's destroyed anyway. Boxing's been destroyed, okay? Boxing's been horrible for a long time because you have too many federations. You do not have one league, and the best people do not fight each other. I mean, it's all bullshit. Now, there are always going to be great boxers, but boxing has a real problem because you have the IBF, the WBO. I mean, it's crazy. Now, can Zuffa do something and fix boxing? Maybe. But the only way you fix boxing, in my opinion, is to stop with these types of fights and have everybody under one flag and have the best fight each other and put on great freaking fights. That's the way you fix boxing. But, you know, last night, you can't say that Jake Paul didn't take shots. You can't say he didn't get hit. Now, for me, I really thought it was a round one that was going to end. But you know what? You got to give Jake Paul some respect, even if you don't like him. And I'm not saying that I don't like him or I do like him, but I am saying that he got into the ring with a monster. He got into the ring with somebody who stood toe-to-toe and freaking blasted Klitschko. And you look, and this is coming off the heels of what he did to Ngannou, okay? The shot that he hit Ngannou with, I mean, I don't know. I'm not getting in a ring with Joshua. I don't know many people that are getting in the ring with Joshua. Well, Jake Paul did. He may have got freaking destroyed, and people may criticize how long it took to that point to happen, but, hearsay. But I agree. I think it should have been round one. But whatever. I think boxing is going to go downhill. I really do. UFC is just so much better. So, whatever. Oh, yeah. Tate's fighting tonight, too. Certainly not watching that, but I'm interested to see who wins. So we'll see. We got some big UFC stuff coming. Yeah, but keep in mind, Joshua's still, what, 36? I mean, he's not even in his 40s. Like, Joshua's at the tail end of his prime. So, I did not sign up for Xbox Game Pass. I've been too busy. I am going to one of these. One of these days, I'm going to. Yeah, I'm excited for the White House fight. I'm excited for UFC to be on Paramount, and it's going to be great not having to do pay-per-view on ESPN anymore. The Tate fight's going to be on Rumble. You got to get a premium membership to Rumble. Crawford retired. I think the UFC fight at the White House is going to be crazy. I'm certainly not going to it, but, we need to look at TKO. I'm so mad because I said I wanted to invest in it on principle and I didn't care about the numbers because it was owning a piece of the UFC. This thing's been a freaking monster since the IPO. A freaking monster. I don't know if it deserves a $41 billion valuation, considering they're only doing $2.6 billion in revenue, but absolutely crazy. Wish I had bought TKO Group. I mean, they have such great, when you think about the backlog that they have from WWE and UFC, it's incredible. Absolutely incredible. CRDO Technology, I've never heard of them. Pretty big company. It does not even ringing a bell. Great chart, Jesus. I'll look into them. ANGX. I don't follow them. I don't know. Have I ever looked at SMR? I've looked at SMR. I've looked at those companies. Doesn't make sense to me. Does TKO have a dividend? Really? They do. Holy shit. That's interesting. I do not follow soccer. Everybody get their holiday shopping done by any chance? Hopefully they did. I do agree that hold on one sec. I did look at SMCI. I didn't look too deeply into it. I need to really do a big analysis on it. It's just where it's trading is very interesting considering where I think we're going with AI. So, no, solo cup does not mean rum and coke. I have a solo cup and I have my coffee cup. I have two different things I'm drinking. And I would rather use these than have to freaking create more dishes. So, once again, gotta love Costco, even though I think the valuation sucks. Yeah, I mean, I like giving out cash too, but sometimes you gotta get gifts for people. Let's give the grandkids a combination of cash and stock. I think we should make that a thing. Love that. Oh, the big slow is going to start a dividend portfolio. I like that. I think REITs will do well next year. I think REITs will continue to do well. I'm a little surprised where they are right now, but there are some I really like. So REITs are definitely very interesting in a lower rate environment. I mean, realty income is just, to me, the gold standard. And I'm very excited for adding more at a 5.75% dividend. I don't cover Rocket Lab. I don't know about Rocket Lab. I actually call it Rocket Money sometimes. So I really don't freaking follow it. I've played around with Notebook LM. I don't think I mean, it's okay, but the good thing is it becomes a closed loop system. MLPI, what is that? No, I have not seen this. This just come out? This just came out. MLP and Energy Infrastructure High Income ETF. Thank you for pointing this out. I will be buying this. I love Neos Group. This from Neos Investments? I'm going to assume. Hold on. What? How did I not know about this? How the hell did I not know about this? All right. It is from Neos Investments. I love Neos. The fund seeks to distribute high monthly income from investing in MLPs and energy infrastructure companies and implementing a data-driven call option strategy. They are not telling us what they think the distribution rate will be yet. What are they invested in? Hold on. It's not even letting me download a whatchamacallit. Oh, here we go. Full holdings. Williams, Enbridge, TC Energy, Kinder Morgan, One Oak, Cheniere, Target Resources, Energy Transfer, Enterprise Private Partners, DT Midstream. I love it. I love it. Hess Midstream, MPLX, Next Decade's in here. Plains All American. Okay. You know what? Thank you very much. This will be getting added. I like this. I like this ETF. Very interesting. I don't believe, I have to look. I doubt a K1 would be involved. I'm not seeing it anywhere, but I will read through the prospectus and get back to you. Yeah, I really like it. I love those companies. Let's see. Yeah, Nebius is looking interesting. I like Nebius, I guess. It's going to get added at some point. I don't know when. Yeah, I mean, Mano, there's other ways to own it. You can go like AMLP and stuff like that. So I like AMLP a lot. The fund that I use my $100 weekly is Dividend Harvesting Series on Seeking Alpha. I will be starting one on YouTube at some point. I mean, look, a lot of Class B and Class C malls closed down, but not Class A. And Simon Property Group is where I am at on malls. Keep in mind, expense ratio is prior to the dividend. You never feel it. You can look at it as you're not getting paid that money, but you know, they got to make their money too. I don't have a problem with that. The time I really care about expense ratios is when I'm looking at total index funds. I'm a shareholder in 3M. I think 3M is okay. So we'll see. Yeah, expense ratios never scared me, but who knows? I do not own IBM. That's the one that got away. I was writing about it. I was saying it was a buy. I never pulled the trigger though. That's why Amit said I should just give him money and have him buy stuff. I was going to add it on Thursday or Friday and I never got around to it. So I am going to add it at some point. I have never thought about using Notebook LM to make videos of my articles. So I don't know. That's not a horrible idea, but I like doing everything live with you guys. I think big things are in store for QXO. So, yeah, I did like CoreWeave over Nebius, but the more I look at Nebius's balance sheet and the more I look at them, and now the forward numbers changed, I'm starting to favor Nebius over CoreWeave. I do not know about blocks. What the hell is blocks? Crypto income ETF? No, I have no idea what this is. Favorite dividend king? Ooh. Altria Group and Coca Cola. I got two of them. I don't know why everybody's saying Rivian. I'm not a fan, but that's just me. I have no idea what GNRC is. Thank you, Rusty. I appreciate it. Now you guys have me interested in potentially utilizing Notebook LM to make videos. Let's see if we can actually do this. That would be pretty wild. Let's see if the chat is on to something. It's really amazing what you can do with freaking AI these days. Swear to God. And this is why, I mean, as we find new reasons to utilize AI, I mean, why would we think that this trade's going away? So what do you guys want me to do? Click video overview? All right, saying this may take a while, so we'll see what happens with it. How many times can I bench 315? 0. I haven't benched in like 5 or 6 years. I'd probably get 225 up like two or 3 times if I'm lucky. I mean, I used to put up 315 like it was nothing, but not these days. Not these days. I don't have a PR. I stopped at 315. I just repped it. I would do sets at 12 on 315. I mean, yeah, I mean, people don't think about it like that. Like, if you weigh 220, is 315 really that much? I have not talked to Chris since he overslept. Maybe he'll come on tonight. I mean, we're gonna do something at 9:30 again tonight, so we'll see. This thing's still generating a video overview. I mean, if I showed you what I used to look like, I don't think you would be. I think it would be much less impressive. I mean, I think there's value in Ethereum. I bought more last night live when we were on the stream. And I don't think Tyron destroyed his legacy. The guy's still a world champion in MMA. Did it for the freaking money. I don't own any cybersecurity. I am interested in CrowdStrike. And TLT is something that I've been very interested in. I mean, I think you can throw a dart at CoreWeave and Nebius. I think Nebius is a little bit more interesting at this point. I have to do more research on PanW and Google. I can't believe that there's so many people that are interested in freaking lifting. That's awesome. Good stuff. Very surprised. Underrated watch? Don't go down that road. Don't start going down that road. I mean, look, I like BM&R here, but that's because I'm long Ethereum. I think Ethereum, we're going to have to do a full Ethereum video at some point. I haven't done one in a while. Maybe we'll talk. You know what? We'll do it tonight. I'll do some research and we'll talk Ethereum and BM&R tonight. I'll see if anybody wants to come on to talk about it. I'll send the bat signal out. But guy, remember, a lot of these people, they go out. I don't go out on Saturday nights. I like hanging out with all of you. Yeah. Rusty, at 60, I hope your heavy lifting days are over. Shit. Yeah, we'll do Ethereum tonight. Yeah, and just so you guys don't think I'm messing with you guys, this is what I used to look like back in the day when I was actually lifting a lot. So I'm not messing with you with the bench. But there's no way I'm putting up those types of numbers ever again. That was a different time. And yeah, and listen, that wasn't on anything. That was just freaking protein shakes. That was no creatine, no nothing, just protein shakes and milk and red meat. Whole milk. There's only one type of milk. It's whole milk. Yeah, I need to look at my average from BM&R. I think it's probably 47-ish, that area. So yeah, I mean, look, I have no interest in exiting BM&R. I think it's going to do well. Look, we don't know what BM&R is going to be like in the next year. I'm just buying more. I have no interest in tax loss harvesting it. There's no reason. Yeah, we already talked about the Jake Paul fight. I'm just surprised it didn't end in round one. I'm looking at BM&R for years. Okay, everyone. So it can keep going down further. It doesn't matter to me. I'm looking at it for years. Yeah, we're gonna have to talk about what's going on with Beckett. I gotta do another alternative asset weekly. There's a lot of stuff going on in the sports and TCG world. No, I'm not selling cover calls yet on BMNR. I was, and when it fell, I stopped. Maddie Whitehouse money. That's hilarious. And just so everybody knows, I was on the phone with him today. We have no idea how that happened. We have no idea. Trend, Jesus, that stuff scares the hell out. All that stuff scares the hell out of me. I don't know how you guys do that stuff. That's crazy. A good amount of the portfolio is S&P 500, guys. Good amount. I saw that Bellinger wants 400 million. Look, I want Cody back, but I mean 400 mil, I don't know. Would I ever invest in the boo-boos? June, who says I don't have any? Who says I don't have any? Biggest holding of my portfolio is an S&P 500 index fund. If you're talking about everything. That 42 is not for Jackie Robinson. George, for the comics, from when? Listen, I like Amazon a lot. I like Meta a lot. I think Meta is a better valuation, but I do have very specific thesis on Amazon over the next several years. So I don't know that I can single one out from the other. I like them both. '80s to modern. Um, you're gonna need to hope you have a lot of key issues. Yeah, I hope that SPY rockets. I really do. Oh, look at this. The video is ready. I don't even know if I can play this or not. I'm not going to play it. 6 minutes. This thing actually made a 6 minute freaking video on this. Can you post this on YouTube? Uncle Clay, thank you very much. I mean, listen. Sometimes, traffic happens. I wouldn't be surprised if TJ was a big lifter. I would not be surprised. Dude, NY traffic freaking sucks, by the way. They're stuck pretty low. Look, Gonzo, here's where I'm at on this. I think we need a salary cap. I hate the fact I'm even saying it, but it's just, look, you're never going to see what happened with the Marlins happen again. You're just not going to do it. So, yeah, I like energy stocks going into 26, actually. I like Chevron a lot. I like Energy Transfer. I own both of them. So, but yeah, I think small market teams they're in a difficult position. Look, as a Yankees fan, okay, I want to see better competition, and I'm not just looking to buy championships. Like I want to see good baseball. All right, everyone. So this is what we're gonna do. I'm at 4:30, so in 2 minutes we're gonna end the stream. I'm gonna get everything set up for tonight. We'll do Ethereum, BMNR, and a full-blown Q&A tonight and hang out, and we'll figure it out. Let me do some research on it, and we'll go from there. Oh, Christian Bale is incredible in American Psycho. I'm going to see if I can play this on YouTube. I'm going to do some research, and if I can, I'll play it tonight. So if you guys are around, I'll be live at 9:30 tonight to hang out with everybody. And I'm going to do some more research on Ethereum and BMNR. I think we are going to see yield chasing into 26. I really do. So we'll see. But thank you for joining me. I think the AI bears are incorrect. The beginning, or at least the first, God knows how long in this video was spent talking about it. So we'll see what happens. But I'll see everyone at 9:30 tonight. Appreciate it. Thank you for the support. Really appreciate everybody hanging out with me. We'll be back in 5 hours. Have a good afternoon.